Hello and good morning, everyone. Thank you for joining this session. My name is Rufus Kamau. Sorry for that. Uh, Thank you for joining this session. My name is Rufus Kamau, markets analyst at FX Pesa. So this is the market snapshot series. It happens every day, Monday to Friday at exactly 11 a.m., where we cover the top market events happening in the markets. We do some technical analysis, and from there, hopefully, everyone is able to trade from an informed perspective. So, as always, this session is not investment advice, it's not a recommendation to trade. So, you should always do your own due diligence. So, that being said, we'll be starting with the economic calendar today, try to understand what's currently moving the markets. And then once we cover that, we'll jump straight into technical analysis, try to understand where the markets might be headed next. And once we cover that, hopefully everyone will get some value from this. So let's get started. So as you can see from the economic calendar, today being Thursday, the 12th of September, we have quite a number of major news announcements coming up. One of them is the ECB interest rate decision. So the European Central Bank is expected to cut interest rates by 60 basis points, and these will be the second cut in the year, basically moving interest rates from 4.25% down to 3.65%. So as you can see, in previous decisions, interest rates were around 0%, especially during COVID, that is around 2020. They remained so up to the first hike that happened in July 2022. And we had quite a fast pace of hikes in interest rates. That was designed to curb inflation in the Eurozone. And now that inflation has gotten very close to targets of 2%, we are seeing the central bank beginning to cut interest rates. So the first rate cut happened in June, where we moved from 4.5% to 4.25%. Then in July, the European Central Bank decided not to change rates and chose to hold at 4.25%. So the next decision is happening today, and we are about to move a notch lower to 3.65%. And that will show the commitment of the European Central Bank to reverse policy in order to support economic growth. As we have seen, the European economy has been really slow this year, and this is as a result of the over-tightening by the European Central Bank. So when interest rates were really high, it made business bad, especially manufacturing in the Eurozone. So we have seen economies in the Eurozone getting into technical recessions, and then getting out, then right back in. And now there is need to cut interest rates to stimulate economic growth. So with that in mind, as for the currency, we expect the currency to continue weakening. So for the Euro USD, if we happen to see 3.65%, the overall expectation is that the currency continues weakening. However, there's a peculiar case of what happened earlier in the week, and that was the CPI news yesterday. So as you can see, so we were expecting the August inflation report for the US, where core CPI increased by 0.3%, and the month-over-month overhead CPI came in at 0.2% as expected, whereas the consumer price index year-over-year dropped from 2.9% to 2.5% as expected. So as a result of this, we had quite a big market reaction. So since inflation dropped, the overall expectation was that the stocks would continue strengthening and that the dollar index would continue weakening. However, the initial market reaction after the announcement of the news was the exact opposite. So the stocks were dumping. If you look at indices, at first they were dropping, and then later on in the session, there was a complete reversal, and all the top indices, including the SP 500, the Nasdaq, the Dow Jones, and the Russell 2000, all closed in a positive, whereas the dollar index eventually started losing some of the gains it had made during the announcement. So we could be seeing something similar today. So the overall expectation is that the main refinancing rate dropping to 3.65% should have a significant impact on the euro, and that should be a weakening move. So if you happen to see a reaction where the euro gains after the announcement, that should not trap you into a bull trap. You should not hurry to buy the euro against other currencies. Maybe remain positive, wait for a bit, and as the momentum dies out, then consider enforcing those short selling positions against the euro. So later on, we'll be having more data coming in, and that is the producer price index, as well as the weekly unemployment claims, before we see an explanation of the monetary policy by the ECB press conference, which will be led by the ECB chair, Christine Lagarde. So we'll also be having another speech from the Swiss National Bank chairman, Jordan, and this will be happening at 5:25 p.m. Then later on, we'll see the natural gas storage from the US, a 30-year bond auction, and later on, the federal budget balance at 9 p.m. So the key events to focus on today include the main refinancing rate, the rate decision, two, the US producer price index, which is a measure of forward inflation. It will be coming up at the same time as unemployment claims. These may have material impact on the US dollar pairs. Then the ECB press conference. So what are the expectations for the US data points? One, PPI as a measure of forward inflation. If we happen to see a much lower than expected producer price index, then that should be weakening for the dollar. But then if it comes higher than expected, then the opposite is true. You should be seeing the dollar making some recoveries. On the other hand, for unemployment claims, these are the people who are filing for unemployment insurance. It's a weaker data point. So if this number of people are increasing, which is the biggest care for the Federal Reserve, that the job market is worsening, then in that case, we should be expecting the dollar to be weakening because we expect a much bigger rate cut. On the other hand, if we happen to see unemployment claims reducing, it means that the job market is healthy, so that would be slightly bullish for the US dollar. So the decision and the rate cut by the ECB may have already been priced in. As we have seen, the Euro USD has dropped to 1.1. Now, the ECB press conference might be more important than the interest rate decision. This mainly because from the press conference, there will be questions, and the way the ECB chair responds to those questions might have material impact on the markets, since it might be new information that has not been priced in already. So we'll be looking to see if the ECB is more aggressive in cutting interest rates, the reasons behind it, and if they happen to be quite aggressive, in this case, if the speech happens to be quite hawkish, then in that case, we might consider accelerating the euro shorts. But then on the other hand, if we happen to see the opposite, let's say a soft stance, or maybe they decide they will not be cutting rates anymore, then that should be positive for the euro. So on the European equity indices, including the German DAX, we should be expecting to see a positive impact from this. So big rate cuts are quite positive for the stock market. So we should be seeing a strong rally happening in European equity indices. So besides that, an overview of what we're expecting for the day. One, yesterday, US stocks happened to be quite positive, especially in the tech sector, with NVIDIA making some of the biggest gains, up 8% on the day. We had Broadcom up 6.79%. We have AMD up 4.92%, Qualcomm 3%, and so on. So the tech sector, especially semiconductors, had the biggest gains, whereas other sectors such as energy had the biggest losses as oil continued dropping lower and breaking into a new yearly low. So today's focus will be on a separate set of earnings, and the focus will be on one specific software company called Adobe. I know we all know Adobe. We have used their products at some point, and the company will be said to be announcing its earnings later today after market close. So Adobe represents the third sector on the earnings calendar, with the Photoshop parent's fiscal third quarter results due out after that last day's close. So Adobe stock gained more than 77% last year, building on its impressive 20-year return amid software giants' broad push into generative AI initiatives, but upside has been limited this year. So we know that Adobe introduced AI to some of their products, and that has improved their performance as well as their demand. So they are also riding into the AI applications drive, and this is leading to more revenue for the company. So Oppenheimer analyst Brian Schwartz had an outperform rating, the equivalent of a buy, says that the data checks point to better trends for Adobe's business and slight upside to estimates driven by improving go-to-market initiatives, pricing headwinds turning into tailwinds, strong momentum with Document Cloud and Adobe Express, and growing traction with generative AI. However, he admits that the operating environment remains challenging for front office application suppliers, which could limit Adobe's bid potential relative to fiscal Q3 results and fiscal Q4 guidance. So as for the company's fiscal third quarter results, analysts expect earnings of $4.53 per share, which would be 10.5% higher year over year compared to the same period last year, on a revenue of about $5.4 billion. Which would also be up 10.2% year over year, or basically compared to the same quarter last year. So that will be the biggest earnings report to be focusing on today. As for the Forex performance, we have quite a number of things going on. So one, the markets have been largely neutral. We haven't had major moves since the day started. With the biggest losers in the day being the Japanese yen and the Swiss franc, which are down 0.17% and 0.2% consecutively. So whenever you see markets being silent like this ahead of a major economic announcement, then in that case, it means that they are consolidating, and you should be expecting to see a bigger move happening soon. So as for the week, if you compare all the currencies and how they have been performing, then the biggest loser has been the Swiss franc, down 1.35%, the euro down 0.66%, the pound 0.61%, and the New Zealand dollar 0.55%, whereas the strongest currency has been the Australian dollar, which is up 0.09% against the US dollar. So still, a key highlight I want you to put your focus on is the performance of Bitcoin, which is basically down 0.02% today, but also for the week it's up 7%, and for the year it's still up that 7.41%. So for the highlights that we are seeing in the day, one is the big expectation of the European Central Bank to cut interest rates for the second time. So as for Sweden, with the Swedish krona, we have seen the inflation rate decelerating to 1.9%, meaning that a lot of European countries are seeing inflation dropping to targets, which emboldens the ECB to go ahead with the rate cuts. So European markets set to rally ahead of ECB. This is something I already mentioned, that we're expecting the equity markets to have a good day, especially if the ECB goes ahead and implements the 60 basis point rate cut. So German wholesale prices dropped the most in 4 months. So wholesale prices is also another measure of inflation, a forward measure of inflation. So when it decreased by 1.1% year on year in August 2024, then this shows that Germany is likely winning against inflation. So Brent extends gains on surprise setbacks. Brent crude oil futures rose to around 71.6 per barrel on Thursday, extending gains from the previous session as surprise setbacks from the Gulf storm. So Australia inflation expectations is slightly. Consumer inflation expectations in Australia stood at around 4.4% in September 2024, which is close to the upper band limit or the upper band expectation by the Reserve Bank of Australia, which means that Australia is likely to continue holding rates higher for longer, and this may explain why we are seeing a strength in the Australian dollar. So Japan business mood jumps in Q3. So the business survey index of large manufacturing firms in Japan jumped to 4.5% in the third quarter of 2024 from negative 1% in the second quarter, which basically defied market expectations. So those are the top highlights in the market today. I don't know if there is anything, any other thing that we can consider to be major. And now I believe we can jump straight into our favorite part of the presentation, where we do some technical analysis and try to understand the overall expectation as well as the current market structures. So as I do that, I'll be checking on the comment section to see if there's any questions that you guys have already raised. So hello, Tony Dark, and thank you for joining the session. I always appreciate seeing you in the space. There's sun always shines. I don't know where to come up with such a difficult name for me to pronounce. Thomas Mashuma, thank you for joining. Brian Jeroge, hello and good morning. Stephen Gugi, thank you for joining. A good question. This is from The Sun Always Shines. When did the Japanese announce that they won't be changing the interest rates? So this happened about 2 or 3 months ago. And when they did that, we saw the scare happening and the dollar starting to gain against the yen. However, in recent commentary from Bank of Japan members, they're also considering to expand their interest rates up to 1%. And that has the potential of strengthening the Japanese yen further. So keep a good track on some of these members from the Bank of Japan and their commentary because it might have more impact in strengthening the yen. So as always, if you're watching this and you are watching this on YouTube, I would really appreciate a like and subscribe. If you're watching this on X or Twitter, kindly like and share the live so that we can have more traders reaching this information. So good morning, John. So another comment here from Hiram. Good morning, Rufus. I'm your fan from, I was attending classes at FXPesa in Nakuru, but currently I'm in Kirinyaga University. I want to start trading since my account blowed. How can I reach you kindly? Kindly reach me on X at Rufus KE. Just my name as is spelled here, just add KE on X or on Twitter, and we will be able to communicate. So, hello, George, as well as J Squad. Thank you guys for joining. So, good question from Mangari Patrick. So, the question is majorly about the top data announcements that are currently happening in the US, especially at 3:30 p.m. So the question is which has the biggest potential impact of moving the markets? So in my opinion, I would say that the Fed has reasonably achieved its inflation targets. The key worry that the Fed has is the job market worsening because one of the core mandates is maintaining full employment. So the job they are failing at is in the job market. And now the unemployment claims becomes the key focus. So a big increase in unemployment claims would be a big surprise in the market, and it would have a much bigger reaction. Remember, for producer price index as a forward measure of inflation, may have already been captured by the lower than expected inflation report that happened yesterday. So I hope that answers your question. Morning, Hillary. Another question here from Oliver. Why is gold euro not a popular pair? Main reason that gold euro is not a popular pair is because that pair is basically, how do I call this? It's a derivative of gold USD and euro USD. So you basically realize that you are trading two pairs. You're trading gold against the US dollar and the euro against the US dollar, and when you combine the two together, you get the gold euro. So you notice that most gold traders also trade euro USD, so they basically avoid crisscrossing the two. Good morning, Emmanuel. So there's a request to check on USDN and the USD Swiss franc. Also to check on AUD USD. So there's a question. I believe you made a mistake here. Was this on the Forever Factory schedule? I'm assuming you are asking about the Forex Factory schedule. Yes, it was. And a question on which sites can one get information on the Dow Jones 30 and the Nasdaq 100 companies' earnings. Also, where can one get news on upcoming rate cuts by various central banks? So let me check. All right, so let's jump straight before I get lost in the questions and miss on the big things happening in the markets. So for those who are new, this is called the MetaTrader 5 trading application. It's the main application that we use for trading, but we also have a mobile app. It's called Equity Trader by FX Pesa. It's available on Google Play Store as well as Apple App Store. So we start with the dollar index, and clearly you can see that the dollar index has made some significant recovery after the big sell-off that lasted 10 weeks. So we had 1 week of recovery, another week of sell-off, and now this week we are retesting last week's high with the potential of the dollar index making some further recovery, and this remains a key level test for dollar index traders. So the dollar index is basically a benchmark that is used to estimate the strength of the dollar compared to a basket of 6 other currencies. So when we look at the dollar index and we see the dollar index making a strong recovery, then it means that the dollar is strong, and when the dollar is strong, is basically strengthening against other currencies. So for Euro USD, we have seen this major reversal happening on the daily time frame. So if you go to the 4-hour time frame, it has been a journey of a big sell-off. So from the 1-hour time frame, this is how it looks like. So after last week's non-farm payrolls on Friday, the euro didn't gain much, and we saw eventually the euro dropping against the dollar, continued dropping on Monday, Tuesday, and Wednesday. And today being Thursday, it seems like the market is consolidating, but it's not actually consolidating. It's usually the calm before the storm. So we know that the storm is coming when the ECB makes its announcement on interest rate decision, which has the potential to cause a big move. So what are the potential targets looking at the ECB? So one thing is clear, that we had a bottom here that was already breached when the market broke towards the lower side, and we have the potential of seeing the market drop further downwards. That is when the ECB announces the expected 60 basis point cut. So we could be seeing the market dropping to around this area here. So this is around 1.09495. That likely target if we see that kind of response. But then we also have the opposite case scenario, and this is if the ECB happens to be slightly dovish. So if you look at this area here, there seems to be some form of conference. The market was finding support around this area here. Second time it was finding support, then this was turned to resistance for 1, 2, 3 consecutive days. And now the market is about to make a major move in the afternoon. So I expect a potential retest of this area here. So why do we expect this to happen? We might see the same case we saw with the news announcement yesterday. So in the news announcement, we had the dollar index weakening at first. Let's just cover that. So notice what happened with the dollar index. So a big rally, and then the market started weakening later in the session. Then it gapped downwards, moved higher, and now we are still playing at the same levels as around yesterday's high. So if you notice what happened with gold, um, notice that there was a big sell-off, and then later on the market made a recovery, and today the recovery seems to be continuing, erasing all the losses we had seen during the news announcement. So if that's the expectation, then if you are trading, let's say the pound USD, sorry, the euro USD, in this case, the major news are from the Eurozone, we could be seeing something of the sorts. Maybe the market makes a big jump, incentivizes a lot of traders to go for buy trades. And once you are in, you notice the market now changing direction and moving in the original direction, which was bearish. So this could play out in the announcement today. So the idea is, as long as we see a big rate cut of 60 basis points, that is expected to tip the scales, especially in the carry trade, meaning that investors can borrow short in the Eurozone and invest in the US. So if we see the market strengthening, the idea is to wait for the market to strengthen and still look for a short selling position as long as we see the 60 basis point cut. So the overall idea is to look for a short, whether it's here or even at a higher price. The higher the price, the better. Remember, if you are a short seller, you want to sell at a much higher price. So if we happen to see an extended rally in the euro USD and it happens to move even higher than this, then the idea is still the same. You wait for the price to go up and then you still execute the same idea of looking for further short selling positions. So we don't know whether it will be happening at this price level or this, but the idea is still the same. So for pound USD, right here, we are seeing the pound attempting to make a recovery. Remember, the Bank of England has been pretty tough on the decision to cut interest rates since they don't feel like they have completely won against inflation. So they're not in a hurry to cut interest rates, and that has maintained strength in the pound. So from the swings, you can observe in the chart here, we had a big swing downwards, big swing up, and then all the way back down to the same previous level here. So it's a very strong confidence level. So it's a very key and important level to watch. So there was a fake breakout and the market bounced right back in. Then we saw a retest of the same price level early in the morning. And now as we enter the London session, the market is bouncing from there again, which means that we are likely to see some further acceleration in price, maybe bouncing from that area. So this could be a likely target for the participants in pound USD market. So we could be seeing the market bouncing from this area and extending a rally to 1.30901. So as for pound yen, we are right back into pattern. So the idea of the triangle is no longer viable. And now we are looking at a potential channel where the market is forming consequent lower highs and lower lows. So with this in mind, you can observe that the market is currently retesting the upper trend line. So if the yen continues being strong in the market, then we could potentially be seeing the market bouncing from that area and heading back lower. So in this case, it's a likely move that the market continues moving lower. But then in the event that the pound happens to strengthen, then the idea plays out to go for a buy trade targeting this area. So it's a matter of wait and see. But the price action is already indicating that sellers are already coming in. So from the 15 minutes chart, you can see evidence of sellers coming in. 3 consecutive candles indicating strong bearish momentum. We could be seeing the market accelerating down further. So for AUD-USD, one of the strongest currencies in the market, where the central bank is not looking to cut interest rates, we saw a big swing from the previous high. So notice how the market found resistance at this area, attempted to break, but eventually went down. So we had a retest of this area, market dropped all the way back down. And then after the big drop, this area that had some good support managed to be the support in the markets this week. And now we are seeing a strong bounce from that area. So from the 1 hour chart, this is how it looks like. So if you are to use trend lines for the past 3 days, I would say, let's say, if this was the resistance and this was the support, then this was a very strong signal to go for a buy trade. But then if you missed this one, the market broke the area, went all the way up. Now it has pulled back and it's about to close higher. So if you happen to see the market closing this way, or even at a higher price than the current one, then the idea is that the market has begun a new leg, retested, and now could be headed all the way up to a price level of 0.67496. And this depends on the weakness of the dollar. So we could be seeing some form of acceleration towards the beginning of the New York session. So on the contrary, if let's say the dollar happens to strengthen for the day, then a retest of the lower trend line and the market getting right back to pattern might be playing out. So USDN, we are also seeing a similar theme here. So a market that was trading in a triangle managed to break towards the lower side. This was on Tuesday. Wednesday got to our two targets, target 1 and 2, then bounced all the way up. And now what we are seeing here is a market that is now retesting the upper trend line and maintaining the same sequence of lower highs as well as lower lows. So in this case, that is no longer tenable. So now we are looking at a potential bearish channel. And if this be the play in the market, then we expect to see some good price action at around this area. Potentially the market retesting this area here and making a big drop in case the dollar weakens later today. So this seems like a likely scenario for USD JPY traders. So on the forward chart, this is how it looks like. So notice that it has been an overall bearish momentum. There was an attempt to move higher, which was met with further selling. We bounced off this bottom, then we moved higher. We broke into a new low. We moved higher, and now we could be seeing the market now going back to retest this area. So essentially, the USD JPY currency pair has already erased all the gains it had made since the start of the year. So you can see that the market opened around this area here, and we are yet to get to the bottom of it. So there's still more room for downside for USD JPY. So this could be a good entry point for a short selling position in case we happen to see a much weaker dollar. So the Nikkei 225 index managed to pull off come back this week. So we are seeing the market going for a retest of this area here, which was a key level support. So after making the big break, the expectation was that the market now bounces back and retests this area. So we already discussed this on Tuesday. So we saw the market going up, pulling back down on Wednesday. Pulling back up on Wednesday, and today being Thursday, there's an attempt to move even further with a focus on this price action level here. So far, I would say we move the trend line to this point here. And now from the highlight of the last two candlesticks indicates some level of weakness. So we could be headed much lower now. After seeing the market retest this area, the overall expectation is a continuation after the retest. So as for gold, we remain trapped in this sideways momentum. So I know it has been tough for a lot of gold traders, seeing the market trading sideways for weeks. So this is the fourth week that gold has remained within this range of 25.28 and 24.73. So now in the most recent swing, after getting to this high, the market attempted to drop, didn't get quite get to the lower trend line, and we saw immediate reversal. So now you can see that overall for the week, gold has been bullish, save for yesterday and Monday. And now there's a likely attempt to retest the all-time high around 25.31. So if we happen to see a much weaker dollar today, this could be the day that we see yet another retest of this area here. So the overall expectation is that gold continues towards this area here. And once it gets there, we chill and wait to see if eventually we get a break and a new all-time high, which might be unlikely. Maybe it will happen on the 18th of September during the Fed decision. But for now, a retest of this area seems more likely compared to a big drop since the dollar seems to be really weak. So oil managed to erase all the gains which had made from the beginning of the year. So this is where the year started. We went up to $91.5 per barrel, and then we had a big drop. So last year, we never saw these oil prices for long. It was only in this area here around March. And in the previous year, we didn't have low prices. So the last time we saw such a low price in oil was back on November 2021. So in this case, we are seeing a progression where OPEC is about to expand its oil production. The US has already expanded its production to become the biggest producer in the world. And at the same time, we have seen OPEC revise the global GDP outlook lower, meaning that they are not expecting the global economy to strengthen as much as they had expected. And in this case, it means that we could be seeing much lower oil prices. So despite the strong jump and the continuation we have had this morning, it seems more likely that oil prices will find resistance here and potentially reverse and now move towards the lower trend line. So the current market pattern here on the last three candlesticks is a pattern that we normally describe as an evening star, where we have a bullish trend from yesterday to today. The first candle is green, second one is a doji in this case, and the third one is a complete overlap on the opposite direction, indicating a strong entry by sellers. So we could be seeing some further downside momentum on Brent oil prices. So on the week, it's still a bearish candlestick. On the day, we had a bullish momentum yesterday, but we could be seeing a reversal today. On the 4 hour, it's still not yet definite. On the 1 hour, if it closes like this, then that could be a signal for a short selling position. So big surprise yesterday. I remember I talked about bullish trap. So now we saw a bear trap during the news announcement. So CPI is announced. Inflation in the US drops to 2.5%. But then out of traders were incentivized to go short here. But what actually happened in the market is that the market reversed and closed on a new high. So this shows the kind of, I would say, liquidity grabs that sometimes may happen during news. So you should be aware of this. And now we are seeing a strong acceleration in the price of the NASDAQ 100 index. So in this case, we are basically positioned at a price level that has been acting as resistance for a while now. So we had the first instance here, the second instance here, and now it's more likely that the market might struggle to break above that area. So be on the lookout for this price action level because it could mean that we see some form of pullback happening from that price level, especially during the New York Open. So from the 4-hour chart, this is how it looks like. And from the daily, this is how it looks like. So we had the big correction here, an attempt at recovery, which didn't meet a new all-time high, and then a big drop here, and then an attempt to move higher, which implies that we are entering a consolidation zone. So if I was to zoom this chart out and you notice the sequence of events we are having, then this market is forming lower highs and higher lows, which means that we are likely trading in a triangle. So in this case, ahead of the expected rate decision by the Fed on the 18th, we should be seeing the market struggling to break above this area here. Of course, if it breaks, we continue going for bullish positions. But if it continues to struggle, then this becomes our new target, a potential pullback to this area, which the market didn't flicker yesterday. So this was a major resistance area. The market broke right through it. So we could be seeing a retest of this area before making the next move. So as for the Dow, we already had a breakout yesterday in the evening. So say this is it. This is the resistance line. The market really struggled to break that around midnight. And now what we are seeing is an acceleration of prices higher. So on the power chart, you can see the strong rejection of lower prices and then the complete reversal, or call it inversion of price. So the daily candlestick was largely bullish. So in this case, I expect some further bullishness. So for the NASDAQ, as I mentioned, this doesn't have to play out. Also, we could be seeing a clean break. If we happen to see a clean break, the next area focus would be around this area here. Notice the level of resistance areas here. So perhaps even a break towards this area. Yet we basically remain patient and see if the market actually breaks that area. So the Dow one day candlestick, this particular candlestick here, is very bullish for me. So I'm expecting to see some further upside today, perhaps a push towards a new all-time high around 41,576. So for the US 500 or for the S&P 500, also we had a similar thing. So on the daily, this is how it looks like. So we had 3 consecutive bullish momentum candlesticks. The candlestick yesterday was pretty strong, which indicates a strong entry by buyers, which could imply that today the momentum continues. We at least see or even get halfway this other candlestick. So in this case, I'm talking about the strong red candlestick here. So the very expectation is that the market goes half of this candlestick here. So perhaps some further upside momentum on the SP 500. So we could be seeing an extension of this array to around this area. So the Russell 2000 is also making a strong comeback after the big bottom here. So notice the sequence or the series of events. So sorry for that. So to remove this. So notice the bottom that we got here. And then now the market is making a big rally. Comparing this to last week, we already have a new high for new low for the week compared to last week. Now the market is attempting to move higher, and we could be seeing a stronger rally extending through today. So some of the key levels to watch include these levels here. So notice how the market has been playing around this area from support to resistance, and now an extension of the rally could project all the way up to this area here. So as for Bitcoin, we had expected a big drop, but then after the CPI, we had a strong correlation forcing a breakout above this trend line here. So now we have already formed a new high for the week, and we could continue seeing this as a major topic. Already the market is struggling to break above this area here. But if you happen to break above that area, then there's more areas to be focused on. So we don't have a clean, big momentum jump. So potentially, if we happen to see a strong rally today, then this should be the expectation. Price action rally to around $60,000 per Bitcoin. So we have been stuck in around 58K. If you are on Twitter, you've probably seen commentary about the 58K gun. So in this case, 58K seems like the midpoint. We usually see a strong extension higher, and then the market gets right back to 58K. So right now we are at 58K on a move upwards. So if we break, we could be seeing an acceleration to 60K later today. So as we approach the end, we have USD trading against the Swiss franc. From the 4-hour chart, this is how it looks like. So there's still more room for upside momentum. Try and adjust my trend line here. So notice how our projection played out. in the previous session. So on Tuesday, we expected a drop all the way down. We were right, the market continued pushing lower. The following day, it kept going down, but the support area or the lowest we got was right here. So the lowest we got was the low of this day here. Market bounced immediately and made a strong rally, and today it continues with that rally. So if now we remove all this, and we have already broken away from last week's high, then the potential for the market getting to this upper trend line remains quite strong. So we could be seeing some further upside momentum with the dollar gaining against the Swiss franc, but then risks of the market eventually dropping also increase as it moves higher. So with the weak US dollar, overall weak US dollar, and now we are seeing a short-term improvement. Potentially, we could be seeing the market bouncing off this area and moving further back downwards. But for now, it seems more likely that in the next couple of minutes or hours, we could be seeing some further upsides. So if we zoom this down and then we look at the previous levels, then you can see that this area here is already a conference level that might act as resistance and the market reverses. We have this level here. So I don't think there's anywhere that we can securely say that this is safe, and we shouldn't be looking for opportunities there. So the idea is to look for a short selling position, either the current price level here or this other area here. So if you are late in the bullish momentum, then you could catch the bearish one. So let's just be patient and wait and see where the short selling trade eventually emerges from. So it could be from there, could be from here. It could also be from the current price level. Then we see the price going back down. So for New Zealand USD, I think this is the most straightforward one. So from the forward chart, it seems like the dollar has been strengthening against the New Zealand dollar, and this momentum is just accelerating. So we just saw this high, which was a high that was along this area here. So notice the confluence of these levels. So it seems like the overall market activity is obeying these two trend lines with different swings happening across different weeks and across different months. So from the forward chart, this is how it looks like. So we had 5 straight weeks of bullish momentum, and then this seems like the second week that the market is making the bearish momentum. So we found some nice support around this area here, and this was at the beginning of the week, and we were expecting a break. So the market didn't quite break, started playing sideways from around this area here, formed a new low, pulled back, and now it's pushing further back downwards. So for short-term intraday trading, I would advise to target yesterday's low as a key area of interest, in this case, as the market accelerates downwards. However, if you are more aggressive than this, and you look at the forward chart, then you notice that this pullback has been ended. And if the forward candle crosses like this, then there's still more room for downside momentum. So we could be seeing the market extending to this area here around 0.60835. So this could be the potential expected direction if the forward candlestick crosses that way. So as for USD CAD, here we have one tricky chart. Main reason is because oil prices have been selling and then recent recovery happening. So clearly, this market seems to be following a path along this area here. And then the other path seems to be following this path here. If we ignore this one time that the market attempted to go down before getting right back into the channel. So right now, the current sequence is the market moving downwards towards the lower trend line, finding support along a conference level. I would say if you trace it all the way back, then you notice the activity around this area. So from support to resistance, and now turned into a support. And as the dollar continues strengthening against the Canadian dollar, we could be seeing a pullback to around this area here. But then if we happen to see a weaker dollar later in the session, then I would be expecting to see a break, and the break could potentially get us to these levels here. So a level of around 1.35. So 1.35 could be a nice target if we happen to see a breakout of the lower trend line. So it's basically one of those markets where you chill and wait, and then you trade what you see. So as always, practice proper risk management. Don't make bad decisions. So checking on the questions I had left. Which sites can one get information on the Dow Jones and the Nasdaq companies' earnings? So earnings are usually on the individual company website. But then if you're looking at a data aggregator, I would suggest quite a number. One of them is Kiplinger. I don't know if you know of the site. So they do a report every week, basically showing the top companies that will be reporting earnings on that week. You might also want to check out other tools in the market or other earnings calendars, including Yahoo Finance. Also, you might consider the exchange itself. For instance, if you're looking at Nasdaq earnings, you can go to the nasdaq.com website. So not many people trade oil. Wrong. A lot of people trade oil, especially Brent oil, as well as WTI or US oil. So what is this OPEC Plus? OPEC Plus is basically a cabal or a group of companies that work, countries that work together. It's short for oil producing and exporting countries, and it's currently led by Saudi Arabia. So this organization basically manages the output of these countries. Remember, if everyone has oil among the members and everyone is just producing as much oil as they can, then it works against them collectively because there will be excess supply of oil in the market and they will earn less from their production. So all they do is try to manage their oil production to match the global demand. So if demand is a certain number of million barrels per week, then they produce just that, or slightly lower if they're trying to manipulate prices higher, or even slightly higher if they're trying to manipulate prices lower. So in this case, they control quite a big supply of oil in the market. So whenever they make a decision, let's say like their decision to remove oil output cuts in October, that led to a big sell-off in oil, erasing all the gains that we had earlier made in the year. So I think you might want to check it out. OPEC and OPEC Plus basically includes other partner countries that participate in the decision making. So we already covered pound USD yen. Remember, the session is live and available. So immediately after we close this, it will still be available. You can rewatch and go through the commentary. So yesterday news came at 2.5. Are we expecting the dollar to be weaker? Yes, we're expecting a much weaker dollar. So apologies for that. So it may not be immediate, but over the near term, we expect the dollar to continue weakening. So what's your outlook on US indices? Rate cuts are very bullish on US equities. So as we look forward to the rate decision on the 18th of this month, we should be expecting to see some further upside on US equities, perhaps some of them already hitting new all-time highs, especially for the Dow Jones index. So rate cuts, as I mentioned, are quite positive for the stock market. I don't issue any market signals. I only offer analysis. So good question from Samimboro. What's your outlook on gold? Do you expect a break higher or lower? So we already discussed this in a previous event on Friday. The overall expectation is very similar with what happened in the year 2007. there's an expectation that gold will break into a new all-time high ahead of the Fed decision on the 18th, and that's next week. So in this case, I expect some further bullish momentum on gold. We have been in a 4-week range, so at some point we are bound to make a breakout, and I can bet that that breakout will likely to be on the higher side. So if the ECB cuts interest rates today, can we expect the Euro stocks to ultimately be bullish, even if we see an opposite reaction at first? What should be the signal for a sustainable bullish move? So the idea is to watch the market reaction. So the market reaction is the key guide. As I mentioned, you trade what you see. So if the market reaction is positive for European equities, then we expect that to continue. So if the market reaction is negative, then you be patient and wait to buy the panic from the market. So a good vote of thanks. Thank you so much for this info. It really helps. You have no idea. Thank you, and you're welcome to all these sessions. So, which is the best currency to pair with the euro if ECB cuts rates? I mean, a currency that can maintain strength against a weak euro for an extended period of time. So, in this case, I would go for the Australian dollar. I believe with them deciding not to cut interest rates, then that should be pretty bullish for the currency. But also, the US dollar is also quite resilient, but I would go for the Australian dollar. So a good question, how many pairs do you trade at once? I've noticed the more I trade, the more pairs, the more the losses. So there's a difference between analyzing and trading. So I might analyze so many pairs, but I'll probably be trading only 1 or 2 assets in a day. So I don't literally cover all this in trading. It's mostly analysis and looking for opportunities. And then opportunities might appear anywhere. So depending on which asset presents a good opportunity, then that's the one that I will be focusing on. So lastly, mouse and keyboard combination to stretch and compress the chart window on MT5. I don't have that. We might have to Google that or try ChatGPT. So I think that is it. We already covered the NASDAQ. Thank you, everyone. Thank you for your time. Thank you for your participation. Remember to check out our latest episode on the Bullish Manta podcast. We have quite a number of things, and this one has a main focus on Kenya. So you might enjoy watching the current episode that we just released yesterday. So that's it for the day. If you're looking to register for an account, check out the links in the description below. If you're watching this on X, remember to visit the FX Pesa page and register for a trading account. So thank you very much, guys, and I hope to see you on the next session.